Chris, we started off this show about an hour ago talking about kind of how retail investors have started to maybe dip their toe back into the pool. All the cash that's on the sideline, $6 trillion or whatever, depending on what number you believe. I mean, even Warren Buffett has a couple hundred billion on the sidelines that he can't find anything to do with here. What gets that money off the sidelines, if at all?
I don't know that it needs to.
Yeah.
And if it does, it's going to be a market decline of at least 20% before people like Warren Buffett and even us are going to come running back in. Market timing is way too hard. So the retail investor is always late. This market's hit record highs. But look at those two stocks you just mentioned. They missed by a little. I'm sorry, 11% growth. Charlotte, that's a problem. But they're getting punished.
Yeah.
So the expectation is for perfection, which is unrealistic. This market could stay up for a while, though.
It's unrealistic, but I mean, to go back to Buffett, I mean, who's obviously the longest of long-term investors, as you are at CalSTRS for any pension fund here, if he can't find a long-term investment prospect, at least that in his view is valuable or of a relative value, then what does that mean for the rest of us?
I think he's spot on. I mean, Warren is always patient. He's getting 5% on his cash, which is billions on his cash pile. He owns world-class companies. And right now the market is overpriced on everything. So nothing is at a discount. I mean, he's famous, as you said. If people are greedy, he's going to be worried. He's going to wait till people are worried to be greedy. And right now this kind of a market is, I'm patient to sit back. We earn a nice return on our cash. We're doing well in bonds. We're diversified. We're fully invested. We'll just sit back and let this go. And if there is any kind of a pullback in the market, then we would come in. But I don't foresee one. We hit the soft landing. We're okay.
We did?
This is the soft landing.
Okay.
This is as good as it gets.
Yeah.
The Fed raised rates to 5.5.
Yeah.
They can ease back down, maybe 4.75, like they've said. And things are okay. The economy, look, the market's hitting record highs. The economy is okay.
So when we say soft landing, that means an economic slowdown, but no recession and therefore no market crash. Down the road, does anyone ever actually remember these soft landings?
No, because we haven't had one before. That's why I remain so shocked. This is the soft landing. I didn't know I could expect it. And I think that's just it. The average consumer doesn't feel really good. And it's amazing when you talk to people in the street, yet they're still shopping, they're still hitting the airports, they're still going out to dinner. And so the economy, as you know with the numbers, is okay, not super strong. So he pulled off, inflation slowed without causing a recession. Now the question is, inflation's going to be sticky. What's the normal interest rate? And I think it's 3 to 5%, somewhere in this range.
Well, people are spending, but they're reluctantly spending and doing so with a grimace. I want to go back to the companies that did report. You mentioned Salesforce and that 11% sales growth. What about this idea that they're now paying dividends? For long-term investors, for those who focus on dividend-paying companies, is that enough to entice them to buy into some of these tech companies that are very highly valued and perhaps a little too rich for their liking, but are paying regular dividends?
I'm going to go back to Warren Buffett. That's the point of corporate ownership, is that I get a share of the earnings of a company. Now, many of them have grown so fast, they think the best thing to do is to plow it back into the company and grow it. Okay, I'll let the board decide. But yes, I want to see dividends because that's a part of stock ownership. It's not all capital appreciation. Look at all the AI boom that we've had. Wall Street is saying that AI is going to be profitable and a huge productivity gain. I hope they're right. I think they're overshooting, but right now AI is an expense, and we're seeing some earnings from it. And the Magnificent Seven, or as you said, the four, are doing very, very well. The other stocks, I think it's interesting, really are tailing off and having a tougher time, as you would expect.